Hey guys, so last week I was talking to my financial advisor about, my future plans, what I want to set up, and all of that good jazz. And in that discussion, we were talking about my investments, the investments that I'm thinking of having their advice in managing. I'm not sure yet if I'm going to have them manage them for me, or if I'm actually going to just be taking the advice but still continue managing them. But the other big thing that was brought up by my financial advisor was the fact that why don't I look into, for example, taking the money that I currently have in some of my general investment accounts to fully fund my ISA. So if you are not aware, in the UK we have an ISA, which is an investment vehicle, a tax efficient investment vehicle. So ISA stands for individual savings account, and with these ISAs we have a £20,000 limit per year. So from April to April, in that period, you can add up to £20,000 in all your ISAs combined. And we have various versions of ISAs within the UK. I'm familiar with the cash ISA, the stocks and investment ISA, and the LISA. I'm familiar with these, but I know there are other ISAs as well. But anyway, not but anyway, in this discussion, like I said, my financial advisor brought up the idea of potentially releasing money from the general investment accounts, the GIAs that I have, which are also investment vehicles in the UK. They are not tax efficient like the way ISAs and pensions are, but they're definitely a tool to use if you want to further continue investing once you've like hit your limits with the ISAs and pensions. And I was like, I have never actually thought about it, but I have been thinking about it. And I'm one of those people, once I get an idea in my mind, I will continuously think about it until I execute it. I wish I could apply that to all areas of my life, but when it comes to like money and my work, I'm that type of a person. But anyway, so we were talking about this and I was just like, I think I should do it. I've never maxed out an ISA before, 20,000 every single year. I've never maxed that out, but that is my new goal. That's something that I want to start working on for my financial future. And there are so many reasons why I want to do that, because once you invest that £20,000, all your gains from that ISA are tax-free. I think this is why it makes it such an incredible investment tool. So I was like, I really would like to start maxing out my ISA. Now, I have talked myself out of this in the past, and I think there was a video or two where somebody had actually mentioned the fact that maybe I should stop investing in my general investment accounts and maybe focus on maxing out my ISA. And I did not particularly take that advice well. I was well, I'll do what I want to do. And yes, I will do what I want to do, but I realized, okay, you know what? They had a point. It's just that I didn't like their tone. I literally was just like, okay, yes, they are onto something. And I've really been thinking about this for the last week. We had the meeting over a week and a bit ago now, and I was just like, yes, I definitely need to really reconsider this. And I want to start this in the new year. Now, I don't know yet if I want to start it in January, even though our tax financial times is April to April. I'm not really sure. Obviously, we're a little bit away from April right now, and we're closer to the next April. And I'm just like, I don't know if I want to start now, but I'm gonna do the best that I can. But I also know that for the rest of the year, I'm going to either decide to pause or stop completely the investments that I have into general investment accounts and start moving that money towards my ISA. But I know that for the next tax year, that's exactly what I'm going to do. But I thought for today's video, before I get to that point of aiming to max out my tax efficient vehicle like the ISA and my pension, I did want to actually go through and share with you my general investment portfolios that I currently have. Some of these you probably won't be seeing them anymore, and some of them will be there in the background. I just won't be talking about them anymore. I can't remember the last time I gave you an overall general investment portfolio update. I included in my other investment portfolio updates, but as standalones. I don't think I've done that in a while. So before I get to share with you the investments that I have, I went into chat and just asked for pros and cons on a general investment accounts. These are the ones that I already know, but I thought chat would probably articulate them better than I can. So let's quickly run through some of these in terms of the pros of having a general investment account. To be honest, I have focused more on the cons of having a general investment account. I've never thought about the the pros. So the pros are there's no contribution limit. I didn't actually think about this, but it's true. There's no contribution limit when it comes to a general investment account. So your ISAs have a limit of 20,000. Your pension has a limit of 60,000. So, if you max that out, you want to still continue investing. And this is where the general investment accounts actually come in handy. So they do not have any contribution limits. The second one is that they are totally flexible. And by this, I mean you can withdraw money anytime. Granted, with my ISA, I have also been able to withdraw money anytime that I wanted. But here it's talking more about like pensions, which have a penalty if you withdraw money, or you can't actually even touch money until you're like 55 and over. So there is that. And Chad also says that they are great for short-term investments, which I agree. And then the third one, it said it was a simple setup. Agree. My Freetrade, even my trading 212 were super easy accounts to set up. So I totally agree with that. And then the one that I did not actually think about was the tax allowances still apply. So even though general investment accounts are not the best or the most tax efficient vehicles for investing in the UK, they do have a bit of a tax allowance, which is that you can utilize your capital gains tax and your dividend allowance income that allowance that we have in the UK. So for 2025 into 2026 tax year, our capital gains tax limit is 3,000. So we'll talk about this in a little bit more detail because a lot of my pots, like my Plum itself, is 3,000 pounds right now. That is invested in there. So that's like my entire limit for the what is it called? The capital gains tax. And I have other ones which are a lot more than that. So anyway, and then also dividend allowance of £500 per year. I'm sad about this. Before we used to have a little bit more. I think it was 1,000 or more than this, but now it's only 500 moving forward. But there's still these little bit of allowances that you can still make use of with the general investment accounts. And also the fifth thing is that there's no restrictions on the type of investments that you can have. So you can have your funds, your ETFs, and overseas shares. You can have all of that. You can have practically any asset that you want in your portfolio when it comes to general investment accounts. Whereas, like for example, Vanguard has its own Vanguard ones, and then there are other platforms where you can't buy ETFs, or you can only buy ETFs and not funds. But I know things are changing and improving in this space, so maybe this one is not, But anyway, okay. The cons that I'm very familiar with are one, no tax shelter, which is true. You will have to pay your capital gains tax above the limit. So if it's above 300 for 300 pounds a year, you have to pay 10% if you're a basic rate taxpayer, and 20% if you're a higher taxpayer, which is a bummer. I'm literally going to sit down and have to do these numbers to see exactly what it would look like if it makes sense. I know it will, but right now we're just going to have a look at that. Dividend income as well, there's 8.75% tax. There's 33.75% or 39.35% depending on your income. My good self is definitely 39.35%. And then there's also income tax on interest distributions. So there's all of these things to think about. Then the second one was, can complicate your tax returns. This is why I had somebody, my father, to do it for me, because I honestly cannot be bothering with this. And then there's no government boost, like for your lifetime ISA you get 25% bonus, which I love. For me, I love getting it in my LISA, and I've said this before, my LISA is going to be part of my retirement plan, as you know, a vehicle that I'm using for the future. And then also here, chat says that your general investment accounts are less efficient for long-term wealth building, which is so true, because you want the majority of your wealth to be in tax efficient vehicles. So this is what chat said. So now what I'm going to do is I'm going to go into my apps. I'm going to take screenshots of all of my apps and include them in this video so that you guys can have the information. And I'm just going to move to the Eiffel Tower a little bit, so and then I can put stuff on here. I need to move a little bit more because we need a little bit more room here. Okay, so the first general investment account that I have is with my employer. I participate in employer schemes where I get to buy shares within the company that I work for. I participate in two types of employee schemes. Is it two? Three types of schemes. So one is to do with my bonus. So if I want to, I can contribute part of my bonus to buy shares within the company. The second one is something that is specific to the UK that they have. And then the third one is an employee scheme that I participate in as well. So these are the three that I participate in, and I've been participating in this since, I want to say, 2020 or a little bit later. I can't remember. I will have to go into the app. My first dividend was in 2022. So yes, I think I signed up in 2021. Yeah, I think I signed up in 2021. Yeah. And so yeah, anyway, I been part of this scheme since 2021, and every single month I have contributed different amounts. I started with, I believe, £25, £50, and I've increased it. So now it differs with each of these, but right now my before tax one is 125. My post tax one is currently at 150. And then the bonus one depends on how much I want to. The first time I ever did it, I put £500, and that was post-tax, by the way. And then after that, I've done like £100 here and there, but I haven't been consistent with that one. So overall, at the time of filming this video, the portfolio balance in there is 15,707.98 pence. That's what I currently have. So this is what I am thinking of selling, and then the money, send it to my ISA. I just want to know if there is a better where I can do this. Like, you know, like, can I know for the company one, I probably cannot do this, but transfer like the investment to like so another provider. But I feel like I may need to do general investment account to general investment account. So for that, I think with this one, I will probably just have to sell it and then put some money aside for taxes, and then put money, the rest of the money, into my ISA. But this is the one that I'm looking to at least release £10,000, because it's 15 right now. I'm still thinking about it. I don't want to release all of it, but I'm okay to release. I feel like because it's 15, I probably maybe I could release. How much could I release? I don't know actually how much I can release. I'll have to look into this and see what I can release, because I've got compensation plans that are available with no conditions outside of paying taxes in the UK. And then I've got compensation plans available that conditions apply, and I need to understand what those conditions are. And then there are those shares in here that are blocked. About £3,000 of the 15 is actually blocked, so I can't action it. I think these are the ones that vest later. If I was to leave the company, say at the end of this year, I would lose out on whatever has invested at the time I leave the company. That much I know. So this is something obviously I will need to look into, especially the compensation plans available with conditions. I want to know what those conditions are. But yeah, so this is the first GIA that I am thinking of. I don't think I will completely stop with this one. I would potentially like reduce the contributions. I think I'll probably reduce the contributions that I am making to these, but I'll discuss with my financial advisor and see what makes sense. Okay, the second portfolio that I have is the Plum. I mentioned I have Plum, and there's about £3,000 in that portfolio. I have invested in different things. I have been using Plum since August of 2020. This one has seen highs and lows. I have sold so many times from this port, paid my taxes where they were due, and all of that good jazz. And I am wondering if I should go ahead and just sell all of the funds that I have and leave the individual stocks. And yeah, because with my Plum app is all about my, how do I say this? It runs up my spending. So if my bills come out this week and they were like, say, £27.50, it will save the 50 pence. It will round it up to £28. So that's how it works. And then it moves that money every Monday and put it into the Plum, and then invest it based on how I have requested it to distribute. So that's how the Plum works. And with this one, I'm thinking I sell off the funds because I believe I already have these funds in Vanguard itself or in my other investment vehicles. So I'm thinking of maybe relinquishing the funds but leave the companies alone, because I do want to continue investing in companies. That's what I'm thinking. But you guys know that most of the time when I repeat myself several times, it means I've already made a decision. With this one, that's where I'm looking to. But I just want to sit down and look at the taxes, because that's the biggest thing. Okay, so that's the second one. Plum is the second one. The third one is my Freetrade portfolio. Freetrade portfolio has suffered. I've had this for a number of years now, and it has suffered. When you look at it overall, based on the screenshot I showed you, I've put it on max and it shows an upward trajectory. But when you look at it on like 3 months, 6 months, you see that, okay, this portfolio is not really doing well. And I'm literally considering selling a lot of these things and maybe just remain with legal and general. I'm not really sure, you guys. uh, I'm not really sure about keeping Freetrade. I do love investing with it. It's easy, but I feel like I am going to just stop sending money to my Freetrade, and that's it. I'll probably just like stop sending money, and we'll review it like every 3 months or something like that, because yeah, I have nothing for Freetrade, to be honest. I have nothing for Freetrade. So I think those are the main portfolios that I often talk about, my general investment accounts. And the other one, which is an ISA that I recently opened with Monzo. I don't think I need it. You know, I should have just left it alone and just focus on my Vanguard ISA. This one I'll probably close by the time I'm editing this video. I'm not really sure, because I probably would transfer it back to, well, not back, but I'll transfer it to Vanguard. I think it would be the best thing that I can do. Instead of sending that £50 to my Monzo ISA, I can just up how much I'm sending to my Vanguard. And yeah, so that's what I'm thinking. I literally have just been like, I've never thought about shutting down my investment portfolios. my general investment portfolios are just focusing on fully funding. If ever in the future I find myself in a position where I've fully funded my ISA and my pension, then investment vehicles like Plum I might use, and maybe Freetrade. Yeah, the employer one will probably stay, and I'll just reduce the contributions to that. But this is what I've been thinking about. It literally, oh, it blows my mind. But also at the same time, I'm like, this information was already available to me all this time. Like, why did I not go for it? But I'm glad to have a financial advisor now where I can bounce ideas off and they can give me the best advice that they have at the time, and I can then decide what I want to do. But this is what's going to happen. So I'm not sure in 2026 if I will be talking about my general investment accounts. Maybe I'll give you guys an update when I'm doing like my net worth update, but there will not be any more videos about these general investment accounts, because my new goal now is to max out my ISA and potentially my pension as well. That's what I'm thinking. But anyway, I just thought I'd make this video. I didn't think I will be talking for this long. It's over 20 minutes already, but that's today's video, you guys. I hope you enjoyed it. If you did, then please give it a thumbs up, subscribe if you haven't already, and I'll see you guys in my next video real soon.